Good day, ladies and gentlemen, and welcome to the show on this Monday, the 22nd of November, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, here's what I want to say. Sometimes, I tell you guys about the good news. I tell you guys about how cryptocurrency is probably going to become absolutely enormously huge, and I've been talking about this for years. And it's an awful lot bigger now than it was when I first started talking about it. There was times when I've been talking about Bitcoin, telling you guys about Bitcoin, that the price was only like $3,500 a Bitcoin. Okay, and I told you guys it's going to become huge. Now it's like $60,000 a Bitcoin. But here's the thing. I don't feed you guys always the good news. Today we got bad news. The Fed's going through a tightening schedule. They've just reelected Jerome Powell as the new Fed chief. And this is a strong indicator that they're going to continue with this tightening schedule that they've got, where by the middle of next year, they're going to be dropping it down to zero of the bond purchases. Well, the Fed's the biggest buyer of bonds. They support the bond market. Already today, we're seeing bonds in the long end jump as much as five basis points just today, and this is it could be the beginning of a front running, but I think the front running will begin, and the run on bonds could begin. We could see yields climb if the Fed's not buying them anymore. I mean, this is just simple math, guys, and this could act as a pin to pop the bubbles, especially the stock market. The stock market's been in a melt up phase. It's not good news for cryptocurrencies. A lot of you guys watch my show are cryptocurrency holders. But here's the thing, and what you got to think. You got to think past this. This tightening schedule is going to be for about a half a year. And I think they're going to possibly get away with the first tightening. But this is a cumulative. I don't think they're going to get away much further than that. I think that at a certain point, bond yields is going to start to go up, especially on the long end. It's going to start to prick the housing bubbles. Housing bubbles that are already being pricked in China. China's talking about more easing now. We've got a Chinese market right now that's experiencing systematic problems on a massive scale, especially in the real estate market. You've all heard about Evergrande Holdings. Evergrande is largely in debt. I mean, they're a big Chinese property development company, and you've all heard of them in the news, but you haven't heard of Fantasia Holdings, which is in trouble too. Modern Land Holdings in China is in trouble too. Chinese Property Group Limited is in trouble too. Yingyang Real Estate Company, it's in trouble too. There's a whole host of them that are in trouble right now. And, ultimately they might have to liquidate properties. China's got over 60% of their income. Chinese people have invested in properties. What they typically buy is a small apartment building, and it's generally, a lot of times, it's not even finished inside, but they buy it as an investment, so it doesn't really matter so much, provided that they hold that as an investment. A lot of these apartments are unfinished inside. There's no water, no plumbing, no heat, no electric. Big apartment buildings, that were built very quickly in these cities in China that they call ghost cities. Tremendous amount of money being held in this. Prices have always went up over the years, so their investments have went up. And the Chinese real estate developers sell something called wealth management products. It's called wealth management products. And what that basically is you invest in a real estate developer. Provided he's selling houses and the price of houses is always going up, they pay off good on these wealth management product investments, which the Chinese have invested in quite enormously. So China is sinking, financially speaking, something very similar to the way Japan had a lost decade. The Chinese markets, and it's already happening, and it's in the works right now. This could spill over into the West to a certain degree. At the same time, we got the Fed going through a tightening into a lot of weakness. We haven't really recovered from this pandemic that we've had for a period of time now. All of it's coming together where Bitcoin is a speculative investment still. It's not a, it hasn't made the full transition over like gold into being a store of value. A lot of people are holding it that are holding stocks and bonds, and holding it as part of their portfolio. I'm going to tell you, the big investors out there can let go of that very, very quickly. And we could see a massive drop in the cryptocurrency markets coming up once we hit that point where the other markets start to drop massively. In other words, this tightening that the Fed's on is basically, guys, a no-brainer. At a certain point, the markets are going to start to react to it, and including the bond market. We have to keep our eyes specifically on the bond market. If those rates start to rise too high, that's going to be the trigger. And of course the rates in the bonds are going to have to start to rise if the Fed's not buying them. It's the situation that we're in right now, and it's going to create a buying opportunity directly ahead for cryptocurrencies. The big gainers, the big winners in this are going to be the people who HODL all the way through this, because on the other side of this, the Fed's going to have, and the central banks are going to have to react to this deflationary pressure that they're going to create. And when they react, they're going to print a lot more money. They're going to, actually, they don't print it anymore, but they're going to create a lot more money. And when they do that on the other side of this, that's when we're going to see the biggest gains. Bigger than we've seen up till now. This has to play out, in other words, guys. This has to play out what's happening right now. It's going to be a little bit tough on all of us, but it has to play itself out. And we're going to have to wait. And the best thing to do is to HODL your coins. If you have them, HODL them through this to the other side of this. It's probably going to be a short-lived thing. I've been actually talking about this for years. I call it the deflationary spike event that comes before the hyperinflation. It acts as a trigger. This is a trigger for the hyperinflation. This is deflationary spike event. And it's when the central banks and the policymakers out there get to the point where they feel like they need to haul back because the dollar's losing value, and they feel this need to try to straighten things out. In their mood to straighten things out, what they're going to do is really mess things up. And that in turn is going to require an awful lot of money printing to straighten things out again. And by the time they do that, we're going to be on the road to hyperinflation. There's going to be no stopping it then at that point in time. Right now they think that they can stop it somehow by having tighter monetary policy. I'm sorry, that isn't going to work, because the whole system is a Ponzi scheme. It's a Ponzi scheme that was started back in 2014. 1914 or 1913, and it's reaching its conclusion now. It's on an exponential, and ultimately it's reaching its conclusion. So, what to do? Well, we're going to suffer through a period where we're going to see our investments. If you're invested in the stock market, you're going to see losses, and you invested in cryptos, you're probably going to see losses. Now, gold and silver, they might hold their own, or they might gain a little bit. I don't think they're going to lose that much because there's mining production costs involved with gold and silver. There is mining production costs involved with Bitcoin, but it's a different sort of thing. It works different than gold and silver. Gold and silver is actual machines. It's running through the ground. It costs over $1,000 to mine. Like it's something like around $1,000 or $1,200 to mine 1 ounce of gold, and that's U.S. dollars, and that's your cost. You can't go below that, or there's going to be none produced. It's as simple as that, So if we get a deflation, there is a floor to gold and silver. Cryptocurrencies, well, the floor's so far down there you can't see it. But on the other side of this, you have to understand the cryptocurrencies are the money of the future. This is the technology. It's a breakthrough technology. It's not going to go away. It's just that we're going through this little period right now. of weakness that's coming in the next couple months. And I'm forecasting it ahead of time for you guys, so you can see it ahead of time with me. On the other side of this, there's going to be massive inflation, and this is a feeder for cryptos. So it's time in the next number of months to position yourself. And then HODL for all you're worth. Become an army of HODLers. And this is the time for this. And on the other side of this, when the Fed relents, it's going to be, I'm not going to say happy days. It's not going to be happy days. Because what's happening is when this hyperinflation starts, it's not going to be directly hyperinflation. It's going to be inflation at first, but it's going to be stronger and stronger inflation as it proceeds. It's going to cause a wealth transfer out of the hands of the middle class people and into the hands of the wealthy, who are going to become even wealthier than they have during this whole crisis that we've been through for the last 2 years. The wealthy have gained enormously, and the middle class have been hurt. This is going to be more than hurting the middle class at this point. This is going to be a period in time that's going to be looked back in the future as a very dark period in time, because the middle class is, well, let's just put it this way. I have a gut reaction or a gut feeling that something big is going to happen, because when you start to take away, the middle class they've always had a meal in their belly, and they've always had a place to sleep, and always had a car to drive. You start taking that away, and well, this is what hyperinflation can do, is take that away from the middle class. And the middle class is an enormous population group. It has tiers. You have lower middle class, upper middle class, but it's all lumped in together. Basically, the only ones that are out of that middle class group are the people who are in complete poverty, the homeless or the poor. So if you're not homeless right now, if you've got a home, you're in the middle class. I consider it anyway to be middle class. And that middle class moves all the way up to the top of the middle class, the doctors and lawyers and stuff, the people who have a house in Beverly Hills or whatever, But it's all one big, enormous, it's where most of the people actually are in the middle class. And this is the group that's going to suffer. And that suffering is going to be translated into a period of, let's just call it turmoil, could be coming. And in the future, that looking back at that period of turmoil, it could be a very dark chapter in human history. But this is what hyperinflation can do. We've never experienced a worldwide hyperinflation before, where all of the fiat currencies are going down simultaneously. This is unheard of before in human history. Generally, it's a hyperinflation with one, maybe generally a small country or medium-sized country, and what they do is they reach out to some other currency that's still maintaining its value. But when it's all of the fiat currencies are going down together, and very quickly, what do? It's uncalled for. It's something that is like, we're in no man's zone. We're in an area that we've never seen anything like this before. And it could be a very, very dire situation worldwide, because everything runs on money, guys. And when the money starts to not function, and that's what happens to a hyperinflating currency, at a certain point it stops functioning, then all the things that are connected to money stop functioning too. And this could be a very dire situation indeed, because money is a driver to drive everything. Now, if it's not handled correctly, now, how do you handle a situation like this? Is you create a new currency and you restore value and faith in that currency. But it has to be connected to something of value. It's as simple as that. So if they get in this pickle, where their currency has no value anymore, and they try to release something that's going to be a substitute, it has to be able to maintain value too. And so this is a conundrum. This is something that we're not going to get out of easily with the governments if they just try to go back to their old ways again. This is going to be a new paradigm where the governments are going to have something backing their currency that maintains its value. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.